Okay, next, Patrick, we're going to talk about some housing and property data. We actually have a ton of cool charts and graphs to show
Mm.
today. Let's start with consumer confidence. It has ticked up a little bit, Patrick, and you're a big fan of consumer confidence, as I am, as a leading indicator because it shows you a little bit of what's to come. What do you read into this? You think it's getting better? It's gone up quite a bit from 47.28% 2 months ago to 49.54. It's a good tick up.
Well, it's a decent tick up, but it's still, historically very low, which is only to say that people remain nervous. They don't know what's going on. There is a cohort, definitely a, a financial kind of demographic, if you will, that are really riding the edge and they have little to be optimistic about. Sadly, I don't know what the actual percentage would be, but let's say that demographic of income level, bottom 30, 35%, maybe even 40%, lower middle and then down from that are pretty nervous. And there's certainly a lot of uncertainty about what's going and what's happening into the future. And there's a lot of nervousness in that regard. So when consumer confidence starts to drop, I think it has more impact, to be honest with you, on what inflation will happen with inflation than even an interest rate hike. And we'll talk about interest rates in the rate debate. But having said all of that, consumer confidence means that people are just going to keep their hands in their pocket. They're not going to pull out their wallet. They're going to cut back on some discretionary spending, and that's not good for an economy. That, of course, takes time to happen. But as we see this consumer confidence still remain quite low, has been the concern for quite a long time now, and it's starting to show up.
The supply crunch is interesting, Patrick. We got some new stats on how the supply is getting pinched and the future supply is only going to get worse. We've been talking about this for years, literally. I mean, I feel like a broken record here. And this is one of the greatest things about being a real estate investor is we have a supply issue, and that supply issue ensures that we're going to be definitely, it doesn't ensure, but it definitely helps us real estate investors to be successful because rents are going to continue to increase because there is a lack of supply. Now, everything, and the reason we bring it, this conversation to the show is because with all the stuff that's going on with the governments and the headlines and all that stuff, they're talking about supply, supply, supply. We're adding supply. They're not adding supply. Look at what's happening in the numbers. You could see them, going down and down and down. And look, in 2023, we're going to be at an all-time low soon as it relates to supply. And this, by the way, is directly connected to what I was telling that counselor. This is why there is no supply. When you put up all these barriers to doing development and doing new builds, why would we do that? We're just not going to do it as real estate investors. We're going to move our money somewhere else. That doesn't help anybody.
Well, there's two aspects to it. Number one, the supply issue continues to be an issue, and we've said so many times. Something the government puts in all these new initiatives. They have great intentions. Just know that if a government says they're going to solve the problem, it's not going to get solved, certainly anytime soon. That's all, and I'm not going to come off that. And that may sound really, I guess, negative and dark and bitter. And well, it is. It's just frustrating because people buy into this narrative that the government's going to solve this housing problem. They are not going to solve the housing problem, full stop. What will solve the housing problem is the builders and the developers who, if the right initiatives are put in place, can solve it. Government isn't there to do that. The right hand doesn't know what the left hand is doing. The federal government isn't communicating with the provincial or the municipal with the provincials. It's just a total disconnect. And so I won't go down that path too far. Here's the other dark side of this particular conversation, JG, which is builders are cutting back. They're not building as much for all sorts of reasons, not the least of which is rates and lending, and then what they're calling labor shortages. But soon those labor shortages are going to start to dissipate. And here's the thing is that part of it is going to be the cause is because they're not building. So then, of course, unemployment, there's a good chance that we'll start to see unemployment in the construction sector start to lift a bit. Although right now, if you listen to anybody, it's going, I can't get good skills. Well, that I get it, but that you look at the lag, we look into the future. That's our job.
Yeah, and you know what? The people who have a hard time hiring, I don't think they're spending enough time and doing a good enough job hiring. Because I put out some ads the other day. I got great candidates again. I've constantly been telling you this, Patrick, and I think it's more of the same. But that being said, back to the builders for a second. As a builder myself, listen, everything is against the builder right now. Prices are flat. In some markets, they're decreasing or barely increasing. So that's not good. the costs have gone up, not down. So that's not good. And rates are way up. So that's not good. So essentially for a builder, everything, and not only is everything compressing in terms of margins as a builder, then try to get your project through the city and through the municipality. That takes longer than it's ever taken. So forget it. It's not a good time for builders right now. And definitely, I agree with you that the governments are not going to be at the source of the fix, but they are the source of the problem, and they have got to get out of the way. But here we are talking about it again, Patrick.
Well, we continue to talk about it. It's one of those things that is always in the, kind of in the world and behind the scenes, a little bit in the headlines. But let's go back to what we talked about, I think, in the last show, which even cost to builders 31%. Southern Ontario, 31% of a new build is going to taxes, and that's not including the after tax dollars that people are spending to buy the house, and then the transfer tax. And like, it's just shocking that the cost of housing is so much of that onus and responsibility lies again with the government. Yet they're there talking about it's the builders, it is the cost of labor, it's all of, and it's just not true. That drives me crazy.
Immigration set a new record, Patrick, in Q1 of this year. Numbers are really off the charts. Q1 over a hundred, nearly 150,000 new permanent residents. If we kept up this pace, that would be 600,000 new permanent residents, Patrick. That's a massive number.
It is a massive number of permanent residents. And of course, what isn't in that number is the, tens of thousands of international students that are coming in. And of course, the temporary foreign workers is another example of what's coming in. That all translate to an estimate of about 1.5 million, 1.3 million coming into Canada. And what is also really rumbling in behind the scenes is the irresponsible actions of the universities across the country with these international students, because they're opening the doors because what they charge an international student is extreme. They're opening up the doors to international students, but they're taking absolutely no responsibility for supplying housing. So we then have this impact of international students coming in, literally sleeping in, walled off with blankets, bedrooms, paying ridiculous amounts, and a lifestyle and accommodations that aren't even conducive to great study and or living a great, even a mediocre life. Let's face it, this is Canada. We shouldn't be third world standards of living for our international students, given that we're the ones inviting them in.
Now, moving on to housing being back in a seller's market, Patrick, listen, it's been exactly 1 year. I know that this decline in kind of the market shift that's been happening for us real estate investors in the trenches, I don't know about you, Patrick, but it kind of feels like it's been going on forever. It kind of feel like I've been at this, but it's only been 1 year. It was 1 year ago that the market was at its peak and just starting to come down. It was actually March of last year. So we're just 14 months past that point, and we are now back into a seller's market. And this is a Canada-wide statistic. So, and we're big fans of saying there is no such thing as a Canadian real estate market, but it's just interesting to see how most markets are in this seller's market. And we've been telling people, Patrick, all along the way in the last 14 months, this will not last. The market will turn, and it won't be time to go into buying deals in the future if you have good deals today. And for some investors that took us up on it, they were definitely very thankful, because now we're back into a seller's market once again.
Yeah, and I mean, the market is, as a matter of fact, at the time of this recording, we're literally shifting into a different market in terms of supply. New listings are starting to uptick again. Different property types, of course. Some property types are still remaining soft, like that condo market in Toronto, Vancouver. Specific condos, by the way. A lot of builders are pushing hard on new projects to try and get them off the ground, and people aren't buying into it right now. That pre-construction investment is really soft right now. So I think we're starting to see a shift again, because listings are starting to uptick, which is a weird timing, given that this isn't a great time that people are in fact interested in buying. So we'll see where it all goes, but ultimately listings are coming up, sales are starting to shift once again.
Some anecdotal evidence, Patrick. I had a meeting with one of my realtors a couple days ago, and they were rhyming off different properties that I was familiar with, and they were like, Listed for 650, sold for 642. Listed for 712, sold for 696. List every single one that he named, listed for an amount and sold under that amount, and all within, like, this is obvious, I'm just specifically referring to the Peterborough market now, all within kind of the 2025 to 40-day range. So, which, by the way, that's that's the way the market used to be, where you would list for a certain amount and you would get close to that list, maybe a little above, maybe a little below, and you would sell within 20, 30 days. This is back to normal, Patrick, not what we saw. And I think the condo market, I'd have to pull the stats and look at it, but my point to, yes, condos are not moving as fast as they once did, especially in the last little bit, but that doesn't mean the market's broken, is what I'm saying. What I'm saying is we're just a little bit back to what it was like before COVID.
Well, we saw that 5-year bond shifted again. They continue to increase, which is in fact affecting longer term rates. So we're seeing rates, 5-year rates go up. So I think that, again, that's going to soften that particular segment of the market. When people are going for mortgages, they're looking at a higher rate, and they're still many people are still sitting waiting for rates to come down again.
Interesting that house prices now, March of this year and April of this year are the last 2 months, and the prices are on an upswing again. You saw a less than 1% rise in March, and then a 1.6% climb in April. And if you look at this graph here, you can see from April 2022 to February 2023, it was negative every single month. But definitely things looks like the house prices have sprung back to life.
We'll see. It's a little bit early to tell, but there's definitely a shift in the wind, Gigi.
Well, there's two months to speak of. We'll see as things go forward. Now, inflation surprised Patrick, which is going to lead us in a second. I don't want to have the great rate debate yet, because that's the last segment of the show. But inflation did surprise, with a 4.4% annual number in April instead of 4.3%. So that was a bit of a surprise. We're not going towards 2% now anymore. Now we're going back up. So it's not good from an inflation perspective.
Gigi, you know that I have said all along that interest rates are not going to fix inflation. I still don't believe they are. People are holding out, saying there might be a rate increase to kind of quell inflation. And the reality is increasing interest rates won't do anything for inflation right now, especially given that a big part of inflation is shelter costs, and shelter costs are made up of a big segment of interest costs on mortgages, which then gets passed on to rental costs. So at the end of the day, inflation will not be controlled by an interest rate. Definitely fuel prices are not at the effect of interest rates going up. Certainly it'll slow down an economy because businesses will not borrow money and will not grow their business. I mean, that's certainly an aspect of it. And we're already starting to see that in many surveys of small business owners. They're cutting back in terms of, no, I'm not going to borrow money. I'm not going to put capital costs into the business. I don't have the cash flow. And whatever cash flow I do happen to have, liquidity that I do have, I'm going to sit on it so that I can actually ride out any downturn. And that's what a lot of smart business owners and entrepreneurs are feeling they have to do.
Interesting, Patrick. Interesting. Lots of really good housing and property data there, and some cool charts for everyone. So hopefully you've enjoyed that segment. That concludes this Sticky Note.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.